CarMax, the largest used car dealer in the United States, just got absolutely crushed. Their stock fell nearly 20% in a single day, and that's one of the steepest declines the company has ever seen. Plus, it sent their valuation spiraling back down to levels that we haven't seen since the chaos of March 2020. And that's when the entire economy was locked down. But this isn't just a stock chart story, it's something much, much bigger. See, when the number one player in the used car industry gets hammered this hard, well, it sends a very clear message. The US auto market is breaking down, and that breakdown, well, it could be the first domino leading to something that we all fear, a recession. So don't click away, because by the end of this video, I'm going to show you how this CarMax crash is more than just bad earnings. It's a warning sign for the economy that could hit your wallet, your job, and the value of your own car. So let's start off with what happened exactly. Well, CarMax had been expecting to see growth. They projected a lift in sales for the quarter, but the opposite actually happened. Sales collapsed by more than 6%. Now, that kind of reversal is devastating for a company of this size. And even more concerning is that their average retail transaction price also went down. Now, in theory, when you lower prices, demand should increase. Lower prices usually brings more buyers to the lot, but this time, sales still dropped. Now, that doesn't just defy the basic laws of supply and demand. It shows us that consumer confidence is quickly breaking. People simply don't have the money, or they're so nervous about the future, they aren't willing to take on a new debt for a car. Now, the CEO of CarMax came out and said that each month of the quarter got worse than the one before it. He admitted that earlier in the year they saw an artificial boost in demand as buyers rushed to get ahead of those tariff fears, and that front-loaded a lot of sales. Now, by the time we got to this quarter, well, those customers had already spent their money. Now the lots are full and the buyers are gone. So if you're running the nation's biggest used car dealer, well, that's a nightmare scenario. So the stock market, as you would imagine, reacted instantly. CarMax's share price fell 20% in a single trading day. Now, that's the kind of move you usually see in a small cap stock, not a giant corporation. And here's the kicker. Year to date, the stock has lost nearly half its value. And that means billions in market capitalization has just evaporated. Plus, if you zoom out further, you'll see shares haven't been this low since March 2020. And back then, as I said, we were in full-blown panic. Investors were absolutely convinced that everything was heading to zero. Now, for CarMax to be trading at that same level right now, well, it tells you just how fragile the auto market actually is. And this isn't just about one company either. CarMax is the bellwether of the entire used car industry. So when their numbers are this bad, well, you can bet smaller dealerships and competitors are hurting too. Used cars aren't luxury splurges, they're absolute necessities. See, people need them to get to work, they need them to drive their kids to school, and of course to put food on the table. So if Americans are pulling back on used car purchases, well, it's because their budgets are already stretched to the breaking point. And when consumers can't afford essentials, well, that's when recessions begin. Now, what makes this more alarming is the pricing trap that CarMax now finds itself in. See, the average transaction price at CarMax is still hovering close to $26,000, and that is an absolute insane number, especially when you consider that only a few years ago, you could get a reliable used car for half that price. Now, the affordability in autos is real. And even as CarMax tries to lower prices, buyers are not showing up. So why? Well, because interest rates are still sky high and insurance premiums are climbing, and don't forget, consumers are drowning in credit card debt. So financing a car has simply become impossible for millions of households in the US. CarMax also made the mistake of overpaying for cars earlier this year when prices were peaking. See, what happened is they stocked their lots at inflated values, assuming they'd be able to resell at a profit, but now they're trapped. They have to lower prices to move cars, but every cut eats into their margins, and investors can see it coming a mile away. CarMax is going to bleed cash unless they make drastic adjustments. And remember, this problem isn't isolated to just CarMax. Automakers like Ford, GM, and Stellantis, they're all due to report very soon. So if CarMax's numbers are this ugly, well, you can bet the ripple effects are already working through the rest of the sector. Now, stick around because in a moment, I'll explain why this isn't just a car market problem. It could be the spark that lights a much larger economic downturn. Now, here's where it gets personal. The CarMax crash is a signal that the affordability crisis has officially hit the breaking point. Yes, car prices are starting to inch down, but financing costs are so high that it really doesn't matter. Lower sticker prices don't help if the monthly payment is still unaffordable. And that's why, even though prices are softening, demand continues to shrink. Consumers are tapped out, and this weakness is showing up in the auto sector first because cars are often the second biggest purchase that people make after a home. Now, think about what that means for the broader economy. When people can't afford cars, well, it's not long before they start pulling back on everything else: restaurants, vacations, even basic spending at grocery stores. So recessions don't start with a single headline. They start with millions of small choices by consumers who decide to hold on to their money instead of spending it. CarMax's disastrous quarter is really one of the clearest warning signs yet that those choices are already happening. And let's not ignore the ripple effect. See, if CarMax and other dealerships are forced to keep slashing prices, they'll simply bleed profits. And that will mean layoffs, store closures, and even more pain for local economies. Automakers will then face slowing demand from their dealer network, which also means production cuts and job losses in factories. And all of this will hit lenders too, as more consumers default on car loans that they simply can't afford. It's a vicious cycle that can quickly spread beyond the auto market into the entire economy. Now, from a consumer standpoint, this kind of creates a strange kind of dilemma. Yes, car prices are coming down, but this is not the time to rush into a purchase unless you absolutely need one. Financing is expensive, depreciation is accelerating, and there's a very good chance that waiting could actually save you thousands of dollars. So here's the bottom line. CarMax's crash isn't just about one company missing earnings, it's about what those numbers reveal. The US consumer is weak, the car market is breaking down, and the recession everyone's been whispering about, well, it might already be unfolding. The big question is whether this is just the beginning of the tipping point, or is it worse? What do you think? Is CarMax the canary in the coal mine, or is it just an isolated case? Do me a favor, guys, drop your thoughts in the comments because I want to hear from you. And as always, if you found this breakdown helpful, make sure you smash the like button and subscribe so you don't miss the next major updates on the economy and the automotive world. And before you go, check out my other videos on the collapse of the used car bubble. It will show you just how deep this problem really goes. So have a great day, my car enthusiast friends, and I'll see you guys on the next one.